Traders, are you sick and tired of swapping around your indicators because they don't work? Are you sick and tired of having the perfect analysis for the market to then move against you? Are you sick and tired of seeing your account balance dwindle away? Then do not click off this video, because I have the one and only solution to revolutionize your trading strategy and finally take that step into profitability. Stick with me, guys, and I'll see you over on the charts. Let's go. So traders, you join me here over on the charts. We are looking at USD Swiss Franc, a pair of mine that I love to trade. And what I have here is I have the indicators that most of you beginner or even intermediary Forex traders will have on their charts at all times. I've got the stochastic indicator at the bottom. I've got my EMAs, I've got my 200 and my 50, and some of you may even trade the cloud as well. And what that tells us is a bunch of information which is useful, but all put together becomes completely unclear and contradictory. So this one particular indicator, which I'm going to show you, I'm going to put on the screen now and you're going to watch me do it. Let's have a look. And there it is. There is my indicator. Some of you may think I'm going crazy or that I've forgotten to add it on, but no. My indicator is called simplicity. And my motto is simplicity turns into profitability. By removing all the junk and all the data that these indicators are telling you, you can think clearer. It forces you to use your own head and understand what the chart is telling you rather than what the indicators are telling you. Simplicity into profitability. So with that in mind, let's put my indicator to the test and see how we fare on this trading strategy. And I bet you it is much better than the indicators that you're using currently. And I'll even throw in there the secret which I use, which turns my simplicity strategy into the most profitability strategy out there on YouTube. So let's get into this pair, USD Swiss Franc. What can we see? Well, the market has been pushing nicely to the uptrend. We've created a high high, a high low, a high high, a high low, and now we're potentially in a bullish move to create another high high. For those of you who are trading without this simplicity indicator, let's pop on the indicators that you'd use. Fantastic. These indicators are also telling you that we are entering into an upward trend. You want to be putting buy positions in. The trend is the friend, we're moving up, but this is wrong. Let me show you why. Let me show you why. Simplicity shows me that I want to zoom out of the chart. Beginners, you want to zoom out and look at the bigger picture. For those of us who are beginner traders, we don't have the time to sit there day trading. So I highly recommend that you swing trade. Swing trading will allow you to have a look at the market on the bigger picture. It reduces the market noise and you can get on with your day with whatever you've got to do and let the pips come rolling in. So I'm going to zoom out on the daily. Now the daily is telling me a completely different picture altogether. Yes, we've had this nice push to the upside, which we see on the 4 hourly, but the daily is telling me that we are actually in a downtrend. How do I know this? We've had a higher high, a lower high, posting a lower low, a lower high, a lower low, a lower high. We have had a push back to the upside, but again, we are had this push to the downside and we're posting up here for a lower high. To confirm this, my favorite tool is the Fibonacci retracement tool. And how it works, I'll link the video up here if you haven't seen it, is we take it from the previous high to the current low and pop it on the chart. And what can we see? We see a bunch of levels. This adds clarity to what the market is doing. And the market now tells me that we've had our higher high, we've now pushed down for the low, and we're in a retracement. We're not in a continuation to the upside, we're in a retracement. And the market has already found on the daily resistance at our magic number, the 0.618 zone. We have found resistance here. Now this isn't a sign that the market is continuing to the upside. This is quite the opposite. This is a sign that the market is ready to push again to the downside in line with the daily trend. So we are looking for short opportunities here. Your moving averages indicators will tell you the opposite. But let me also show you why I'm right in this, and keeping your markets and charts simple is the best. So we've already identified this. Now, I could just use the Fibonacci as gospel, and it says, well, you know, we're at my golden number, let's enter a trade. But we want to add confluences, biases, and we want to get our edge over the market. So looking at the chart simply, let's get rid of our Fibonacci. We'll come back to that. I'm going to draw on some simple support and resistance zones. So I had a zone up here. We've obviously got our high up here. But the area that we're interested in now, based on our Fibonacci, is this zone here. Why are we interested in this zone? We've had 1, 2, 3 on the daily taps previously around March area. We've had a fifth tap over here, or fourth tap, sorry, over here as resistance, and again resistance, and hopefully another form of resistance. So our support area here is now turning into resistance after this push to the downside. Fantastic. We trade support and resistance zones. They allow us to have the most probable trading strategies and wins that we can have. Remember, no one is Mystic Meg in the market. We can't predict where it's going to go, but we can have our probability ducks lined up nicely so that we know that we're on the best chance of the side of the market. So keeping it simple, I'm not interested in the price going high. My analysis is that price is going to drop. We get rid of the junk. Keeping it simple again, and to refresh, we've identified this area of support, now resistance, which we're going to trade on. And we've also, looking at the daily, understand that the market is actually in a downtrend, and we're looking to capitalize that from our entry at this particular key area. Now we can zoom back into the 4 hour. As swing traders, we want to take our trades on the 4 hour. It reduces the noise of the 1 hour and the 15-minute chart, which the intraday traders are trading from. Us as swing traders, we want to look at it on the 4 hour. The candle formations and patterns that get posted on this particular time frame are very clear and concise. So again, keeping it simple, what can we see? What is the chart telling us? The chart is telling us that over here on the 2nd of July, we had very powerful wick rejections at this area. Furthermore to that, we are also at the 0.2600 zone. Now that is a whole number, and we know the markets like to respect whole numbers. Another bias in our favor that it is a rejection zone. We had a strong impulse candle to the downside from this area after our wick rejection candle. Again, another sign that the market is rejecting this area quite heavily. What we're seeing here is we're seeing that the buyers are still not giving up this position. They're trying to break through and push past this area of interest. But this is not what we've analysed. We've analysed the market is going to go down in our favour. And what we want to do is we want to get our final confluence, and the most important confluence, to confirm that the market is in fact sinking. And that indicator, or that secret, or that tool, whatever you want to call it, is, as my name suggests, the commitment of traders. So let's have a look at the commitment of traders and see what the banks and institutions are doing to make sure that we are trading in line with their trades and not with the retail traders who are looking at the EMAs and the MAs and whatever other indicators they've got going on telling them the opposite. So let's head over to the commitment of traders reports now. So over on my website, Commitment of Traders Club, if you're a club member, you get access to the clearest COT data out there. You'll also get a brief description of what's going on currently. We're back testing, so we are looking at the 8th of July, beginning of July here. So we're trading USD Swiss Franc. The chart, or the commitment of traders, is always traded spot against the USD. So this is CHF USD. We want USD CHF, so we just simply reverse it. It's not too difficult. And what this is telling us is from July, so we're here 6th of July, the CHF has grown immensely in strength. It is a very strong pair. What that then tells us is that CHF USD is going up, reverse it, USD CHF is coming down. And the stronger the CHF gets, the weaker the USD gets. So we're trading the United States dollar against the Swiss franc. And if the Swiss franc is stronger than the US dollar, then the US dollar is going to fall. Perfect. Going back on our COT data to confirm, again, net positions round the beginning of July, very heavy to the long side, and have grown since, you know, the 11th of May. So this is a 100% confidence that the Swiss franc is stronger than the USD, and that banks and institutions are opening up short positions on USD Swiss franc. Perfect. This is all we need to take our trade. We've got our bias, we've got our direction, and we've got our confluences. And also, by trading with the COT data, we have our edge. So, going back onto the chart. Again, if you're a retail trader and you weren't keeping your markets and your chart simple, you'll be looking prices above the 200 EMA. As many YouTube traders out there will tell you, if the price is above the EMA, you're looking for buy trades. If it's below the EMA, you're looking for sell opportunities. Well, that does work in some cases down here, but then you're trading by chance. We want to trade accurately and on the right side of the market. And for those of you who are trading this strategy, you know, you may have watched it on someone else's video, you'll be getting frustrated that your indicator strategy isn't working. Well, this one's going to work. Let's check out why and how it's going to work and the options for us to enter into this trade. So let's get rid of our junk. Thank you. So we've identified our market structure. We've identified the area of interest. We've identified that it's going to go to the downside, and we know we're on the right side of the market. Now all we do is enter. There's two options. The first option is we enter aggressively on our Fibonacci level. So let's pick that back up again. So again, we'll draw in our Fibonacci level from the high to the low. Gosh, back on the 4 hour. And there we go. We can even see that it's rejecting this Fibonacci area almost to the pip. So my preferred option is, and if you want a copy of our trading plan to know why I will enter here and not at the retest, link below for our website, become a member, and you'll get access to fantastic trading data, tools, tips, and tricks. So for me, I'm in. I'm going to enter. I would have probably had a pending order up here at this level, but because I've missed it in this indication, let's say we're trading live and I've missed it and we're just at this close, I'll put an instant execution order and just be a little bit more conservative with my stop loss. Okay, so we always want a 1 to 3. I'll lock that in place. 1 to 3, even if you are a rubbish trader and you're using the EMA indicators on their own, you can still be wrong 7 times and you're still in the money. So it's fantastic. 1 to 3, we don't need that much for stop loss. Okay, 3, we are ready to go. Instant execution order. And if you're looking to get in a bit more conservatively, or you want that extra confluence for the retest, we'll be looking at the retest around this area here. But this is my trading strategy, so let's get straight into it, and I'll see you on the winning side of the market. Let's go. And there we have it. Definitely the spread would have tapped us out there. In fact, 100% it tapped us out there. Within the space of a few days, we have made a huge amount of money. Let's have a look. We have profited 122 pips to the downside. And that is a fantastic trading opportunity from a very simple strategy. Remember, simplicity into profitability. If you wanted to trade on that retest, let's carry on. I'm satisfied, I'm out of the trade, whatever. But if you did want to wait patiently for the retest, let's see how that would have played out for you. And even if it would have played out, okay, so we're coming back to this level. We could even draw in retest here. And you could have entered your trade. You know, on here would have been a good point to enter your trade. On the wick rejection, again, keep it simple. No indicator, no EMA will tell you this. Keep it simple. Again, 1 to 3. There we go, that'll do. Bang. Again, nice and easy. So if you didn't enter aggressively like I did, you always have that option for that retest at this area. You can even use the Fibonacci from the low, from the high to the low. It did tap the 0.5. Ideally, if you were playing conservatively or to your trading plan, as I would if I missed it, I'd wait for the 0.16, but say you didn't and you're a little bit more relaxed, you wait for the retest, you'd have made some money again. Now, if you'd followed your indicators, which most of you may use, you know, you would have entered a buy position up here with a stop loss down here. You're out. That's it, you're out of it. Even the 50 EMA, again, you're out of the count. So traders, my lesson for the day is keep your charts simple. That is the best indicator out there. If you learn how to actually read and understand what the chart is telling you, then you're already in the money. You know, we've even had a chart pattern here, a nice double top. There's your confluence. It's failing to break the first time. We hope it's going to fail to break the second time. Wick projection told us that it is failing to break that second time. Enter the trade. Smashed it. Okay? Keep your chart simple. Don't get caught up in what the indicators are telling you. Use what's up there. What is your brain telling you? Once you have come up with your own idea, there's no YouTuber out there that will put the idea in your head. Come up with your own idea. Back it up with confluences and biases. So like you saw, we're trading with the overall trend. Number 2, we are at a key area. Number 3, our fib level is spot on the money. Number 4, we're trading at a whole number. And then finally, our edge in the market is what are the banks doing. The retail traders 9 times out of 10 do the opposite of what the banks are doing, because the banks know how to manipulate the market nicely. Trade in line with them. Join us at commitmentoftradersclub.com. And you will get access to everything you need to become a profitable trader and understand the power of the COT data. Traders, I wish you all the best in the markets this week. Let me know in the comments below how you get on. Let me know if you're going to implement simplicity to your trading strategies, and I look forward to hearing your fantastic results. Drop us a like, smash that subscribe button, traders, so you do not miss out on amazing content like today, for you to remove all the rubbish you've been taught before and keep it nice and simple. Remember, simplicity equals profitability. See you on the next one, traders. Bye bye.